Hello, Dan.
Morning, Trevor.
Morning
I
to
hope
you.
all's well. I hope all's well. I can see, I've already made you the presenter and I can already see your screen.
Okay.
And we're looking at the relative rotation graph.
Yes, we'll start with this one today.
Okie dokie. I think it's not, will I make it 9 o'clock? I think we can get, a minute to actually. How about yourself? Oh, we'll make it 9 o'clock. It's happened. I think we can get started. Okay, hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We'd like to remind you that this webinar will be posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again or you'd like to watch a particular part again, please head over there. And we'd also love it if you'd subscribe to our channel and hit the notification bell to receive updates. The webinar handouts can be downloaded from the handouts tab of your GoToWebinar control panel. If you're having problems finding them, please let me know in the questions and I'll send you a link and you can download them. The first handout is basically a CFD guide which details all the different products that we offer at FX Choice, and the second is a guide that will help you understand the different terminology that Trevor uses. If you're watching on YouTube, these handouts can be downloaded from the description box. So for those of you who don't know Trevor, although I'm sure you all know him by now, he's a very experienced technical analyst and trader. He has over 40 years experience and worked as global head of technical analysis at Bloomberg. So it's quite a long introduction, Trevor, but I think we can get started. So without further ado, over to you.
Okay, thanks, Dan, and welcome everybody. Thanks for joining us. Today, I'm starting with our relative rotation graph, which some of you will be familiar with but it is a bit of an unusual graph. If you want to see it, if you go on to relativerotationgraphs.com, you can see it for yourself for free. The first one we're going to look at is of the G10 currencies. Just to make sure you know what we're going to cover today, we're going to cover the currencies, major currencies, cryptos, Bitcoin and Ethereum, commodities, gold and oil, and then the stock indices at the end. So we're going to cover all those today. All right, so what's the story with the currency market? Well, this is a very good way of visualizing what is going on. What we can see here, the crosshair in the middle is the US dollar. Anything to the right, and there's only one thing in the G10 to the right of it, and that's the Canadian dollar. So the Canadian dollar is outperforming the US dollar. All the other majors are underperforming, and the worst performers are the Swiss franc and the Japanese yen, and you can see that here's GBP in here, and here's the euro in here. Euro worse than GBP. New Zealand dollar, which has been such a star in the past, has now turned down and is heading in this direction, which is really the wrong direction. It's heading southwest. So heading west means it's getting weaker compared to the US dollar, but also south means with declining momentum. And so it's poor and getting poorer. You could make a case that the Swiss franc and the yen are poor because they are performing poorly because they're on the left of the dollar, but are improving as far as momentum is concerned, but still likely to be stuck over here for a bit longer. So as a strategy, Canadian dollar is your leader, and anything in here is your short against the US dollar or the Canadian dollar or any other thing which is further to the right of it. So this is a good way of visualizing all the pairs. So let's go now to the charts, and we'll start with the euro itself. And just want to remind you of the weekly chart. I know it's a big picture and it's not probably your horizon for trading, but we have come down hard in the euro from big resistance from 2018 into big support from the early part of last year. And this big consolidation here, I'll give it a cigar, and we've punched hard into it. The technicals are looking very weak. The weekly RSI is moving down very, very powerfully, and the MACD is decidedly negative. So from a technical point of view, no long-term perspective, it's weak. And this is a real classic one for your album of the bearish divergence. Look at this. We had this in 2017-18, and we had a warning of a significant top as we approached that resistance high early on. But let's get to Real life now, we are on our way down. We've zigzagged lower. We've made a new low here. This was this low here, which is a significant one that we broke last week, was the minimum price objective from the zigzagging pattern down. So we've made that minimum price objective. It bounced 38.2 of the move down, and then now it's come down broken. Technically, this is a very bad development, short-term development in the context of a negative longer-term chart. So we're look like we're heading lower in this market, much lower. In the very, very short term, so when I say the very, very short term, I mean next few days, the RSI is deeply oversold, and it's close to triggering a move up through 35, which for many traders might be a buy signal. But do bear in mind, this is in the context of an intermediate and long-term strong bear trend, and the trend as measured by the ADX is strengthening. So everything's negative here. The only thing on the averages, the 20 is still above the 50, and both of them are below the 200 here. So that's sort of not, but that's about to change. I think the 20 is about to go below the 50, and then they'll have fanned out 200, 50, 20. So a very bearish picture here, and we have to look back into this to remind ourselves that we are in a support area. So it can pick up support at any level, but at the moment it's pointing south. Sterling cable is now, again, so I'm going to go back to the weekly chart to get some context here. I refer back to this big double top in 2018, which was, was a very significant double top. We made our way to it. We poked at it and then rejected it, and we've drifted backwards since then. The MACD has now crossed downwards, and so from a longer term perspective, the pound is declining, and the RSI is also coming down here. So this is, hit resistance and pulled back. So here is the decline that we're seeing now. I've drawn a little channel in there. I've used dashed lines because it's not extremely well defined, but we bounced up from the lows of it there. So we're trading below the double top resistance from the 2018, which is centered on 140, to the support around 137 area, which is where we bounced last week. So precisely, actually, the support is at 136.68, and the cigar, which I can bring in from the left-hand side, that is a very significant support level, and that's where we are now. So if it's going to stop, this is a good place for it to stop, but it's mid-channel, and the channel is bearish. So longer term, negative; shorter term, at support, can hold. We're seeing a little bit of a bounce here. The RSI lifted up through the 35 level here. That's a small buy signal trigger here, but inside the context of a declining channel. So I think it's going to, struggle is probably the best way. But what does look a lot better is the GBPEUR. Now this looks as though it might have some considerable potential here. So this is something gone wrong there. Yeah, so we've pushed ahead. This is the weekly chart of the GBPEUR, pushed ahead strongly towards its double top resistance here, but the technicals here are looking very strong. The weekly MACD is very positive. The RSI is surging due to the strength. We're coming into resistance, which is between 118 and 120, but looking at the daily chart here, we're testing these important highs right now, and this could be a breakout trade. We've got higher lows in here during this consolidation period here, making this pattern an ascending triangle, and breakouts from us ascending triangles can often be quite powerful. So we've got very clear levels test levels here, all around 117, all below 117.20, and this could happen early this week. The RSI is looking positive, the MACD is negative, but could easily cross. The moving averages are positive. They're 20, 50, 200. They're in the right shape. They're no real indication from Bollinger Bands. You know, in order to indicate a successful breakout, I would love to have seen these splaying out. They're not. So we aren't seeing increased volatility as we hit the resistance point. The message of that is that it might be delayed a bit, but it's a crucial point. Could fail, of course, could even come back and make a higher low again, but we're testing a very important point, and this potentially could be a great trade in the making if it breaks that high. We must look at the Canadian dollar, and let's just admire this strength. You know, the most to the right, the strength of the Canadian dollar is declining here. That's the US dollar itself. It held support from the 2018 low there, tested it, broke it briefly, but has now come back above it. But it's in a very, very strong downtrend, much resistance above. So I think, you know, to me, we're going to be turning down again soon. And what we have got here, if you can see this clearly, is a down channel. I'm actually going to change this from a dashed line to a solid line because it's not now indecisive or badly drawn. I think it's a good line here. So there we are. We've changed it to solid. We've got 1, 2, 3, 4 points on it. We haven't broken down from it yet. So we're in this down channel here. We're testing the top end of it. The RSI is bullish. The MACD is bullish. The Bollinger Bands, which might give us an indication whether it's going to successfully break out or not, are not splaying out in the way that I would hope to see, but they're wide and rather narrowing. But so that's often a good indication of a breakout point. We're close to the 20-period moving average, and I think there's a chance that this is going to break out. I think it's not a strong message that it's about to break out, but if it does, we've got a very clear point, a very nicely drawn line, and going above that would indicate a move up, and this would be called a very clear reaction, completed reaction, and we'd get some dollar strength and some continued Canadian dollar weakness. But remember, it's in the context of Canadian dollar strength, and any moves up in this is counter trend, trend, and for many people with a longer term horizon would be a opportunity to short the dollar and to buy the Canadian dollar. It is the only thing that is sitting to the right of the US dollar in that RRG chart. So watch the behavior at this line here. We could fail and then continue the decline of the US dollar downside in this channel here. Perfectly likely that will happen. So, but this week we will know one way or the other. Moving now to the cryptos. Again, I'm going to take us to the RRG. You can choose all the cryptos, but it tends to get very crowded. I do. I've just put in the 3 main ones versus, of course, the US dollar. Here's Litecoin, Ethereum, and Bitcoin. Bitcoin is furthest to the right of the 3, so it's the strongest of the 3. Litecoin is actually underperforming the US dollar, but here's the thing, all of them are heading southwest. This means west means they're weakening, south means that they haven't got positive momentum, so they're weak with very low momentum. This is technically a pretty poor, a very poor message. So outperformance here in Ethereum and Bitcoin, but it does look as though I know look at where they're heading. This is Friday, Thursday, Wednesday, Tuesday, Monday, and you could see how it was heading and how this looks like it's heading by the week, and maybe by later in the week we'll be down in here in Bitcoin too. So that's a warning message for the cryptos versus the US dollar as an investment opportunity. So let's go to Bitcoin now. So here we have Bitcoin, you know, at one level you could say it's stalled, but you know, we're always look at the context of it, and there it is. What a rampantly strong market. It's no wonder that it has a small pullback and rest. It needs a rest after that charge that we've had there. So here's the rest. We did get, and we noted here in these calls, the bearish divergence signal that warned us that this high here was a weak attempt at a new high. It was a false break, in fact, and now we've drifted and consolidated since, with the RSI coming down after that signal. The MACD is negative here. So it's pulled back now, and the longer term trend is still strongly positive, and I still have a long-term objective of this as 71,000. But buying dips is really the best strategy in a strong market like this, and so that was a buy as we came down through 35 here and turned up here, and it's rather a weak move out of that, so that's a bit disappointing and doesn't look like it's the one that's going to take us up through the high on this occasion. Notice the Bollinger Bands are narrowing quite sharply. This means that there's probably going to be an impending volatility break. Well, I hope to the upside, but it could be to the downside. The ADX message has come down to a very low reading here of 14. That means we're in trading conditions rather than trend conditions. So we may have to wait longer for that, but the overall trend is still, in my opinion, bullish. The second best is Ethereum. We've got the similar pattern here, although this second high here wasn't higher than that one, so we didn't get the false break. We've got a much clearer two areas of support in Ethereum here from the end of last month and the beginning of March. Consolidation, another cigar back in January here. So all of those are quite strong support levels, and I think that last week we held at that support level, which was in fact a 50% retracement of that March advance, and it's moved not strongly out of that, coming up through 35 there is the signal, but it hasn't moved up very strongly. It's meeting some resistance at both the 20-day average and the 50-day average here, so they're together and forming resistance. Together is a message of flatness in the market. So what have we got? We've got lower highs here, we've got higher lows here. That gives us a triangle. Let's draw it in, the triangle, because then that gives us the breakout points. These should be dashed. I may not have, I will dash them before the next time you see them, because why? Because we've only got 2 points on them. They're not proper lines, but we have got a lower high and we've got a higher low here, and we've got a range which is narrowing. We've got a breakout point above and we've got a breakout point below, and we've got narrowing Bollinger Bands, which indicates a volatility breaks, and I think that will be triggered by the breakout of those lines there. So watch that, but there's nothing really apart from the trend, which is relentlessly bullish, to indicate which side of that triangle is going to break out. Intuitively, I think it's to the upside in the direction of the trend itself. Any questions at all, Dan? And please, anybody ask any questions, because I'm going to move on to gold and crude oil after this.
Exactly, Trevor. People have been requesting gold, so I've told them to hang tight. We'll be getting there shortly.
Yes, be a bit patient. Let's go for crude oil first to keep you tense and on the call. Sorry, it's the wrong crude oil. Here's the right crude oil. Okay, again, we must remind ourselves of the weekly chart, because this is so important. That $70 level on Brent crude oil, those two tops there, this one's spiking a little bit above it. We always knew this was a significant resistance level. We've now broken down on the weekly through the 65 level and the RSI, indicating an intermediate term top. The MACD hasn't crossed yet, so be careful about prematurely calling that, but this was always going to be a difficult level for the market to break. We've come back to 61.8 and bounced from there. So let's look at the daily chart. Here's the 61.8 pullback and bounce from there. We've got shorter term support in here below us, but it was always a bit alarming that this area here at the beginning of February, we moved so quickly and there was no real support. So I was personally very relieved that we held when we had that hard sell-off there, and then we had the next day's candle, which was a very bullish one, because that really was quite threatening for a drop right down to $58 there. But now we're consolidating in generally a flip-flopping pattern. It's like a bullish, bearish, bullish, bearish, bullish, maybe bearish, flip-flopping candle to candle, each candle being quite big, but on actually low volume, the candle. Trend is deteriorating. The RSI is going down and the MAC is going down. Now, they've got more of a horizontal top here and a rising low in this pattern here, and that would be an ascending triangle. There, 65.20 is the high there, and then we've got rising lows in here. That more often than not breaks to the upside rather than the downside. But what we've got is a very nice trigger here in the RSI. We've got a nice downtrend line in play here, and if the RSI breaks that downtrend line, that would be the indication that we're breaking out with momentum out of the ascending triangle, which is generally a bullish pattern, which should indicate another shot at the higher end of the range. But just don't forget the importance and stiff resistance we've got at $70. It may break, you know, but it's very typical of the behavior of prior to a major breakout that it should do this. But also beware of this breaking this low of 60.27 here, because then there is very little support below, and it's a dangerous thing if that gives way, because we could have a speedy move down. But this week we will know one way or the other, and the trigger is nice and clear with that RSI downtrend line. Okay, gold now. Okay, so weekly chart on gold to get the context for this, and then we can zoom in on it. It's in a downtrend. It's come down to a big cigar here from the spring of last year, and it's resting at that now. It has broken. We've talked about this before. The pattern of rising lows has been broken. It's not bullish anymore. This is a significant resistance level. It's bearish, declining RSI, declining MACD. Gold is not looking good. I've said this, made this point to you many times over recent weeks. The daily chart is we traded very narrowly last week. All the candle bodies themselves were very small. We had rallied at the beginning of the month and then drifted rather weakly, I've got to say, to only 23%. I had noted the strangling of the Bollinger Bands, which normally indicates a volatility breakout, but we haven't actually seen that this time. It's just continued to trade rather weakly. So, you know, it's weak. Intermediate term, long term, it's weak. It's rallied off the low, and the low there. Very important to note that low, because that breakdown could be significant for the next leg. Lower 1676 is the breakdown point. It's drifting, but the drift is rather weak. Small candles. There isn't a lot of power in that drift, so it doesn't look as though we're going to make a challenge of this low on this leg here, and you know, more likely to stabilize, I think. So, you know, just, you know, beware of what you're seeing here is a weak commodity hitting support. So that is an area where it could hold, but the trend is strongly weak. But we're at the area of support, and it's consolidating. So later on, we may be looking at a market which is beginning to have signs of holding, but to me, it's still dominated by the downtrend, and it hasn't held yet. It's just stopping at one of the places it's likely to stop. We haven't looked for a while for the the ratios. I'll show you the gold silver, since there's a lot of interest in gold silver. And let's go to the weekly here. So this is gold divided by silver. So going down is gold weaker than silver. That has been the trend through all of 2020. We've got a slight strengthening in here, but in the context of a downtrend. And you know, probably if you were trading that as a pair, then you'd be looking for opportunities to short gold versus silver once again. It having corrected itself. It's now, the RSI is above 50. And then gold versus the S&P. So I'm going to use GLD, the ETF, for that. So is gold a good asset versus the S&P? So no is the answer. So this is gold divided by the S&P. Going down here is the underperformance of gold versus the S&P. Once it broke that uptrend line, which we talked about a lot here, that was a new leg down, and the continuation is this move that started in 2011 of the underperformance of gold. We had a hurrah during 2018 and 19 when we got some overperformance of gold, but basically the longer term trend has reasserted itself of gold not doing its job of giving us protection. Any questions on that as I move on to the stock indices?
No, Trevor.
Okay. Yeah, so we've done the Brent crude. Okay, so let's go to the US 500 first. It's a weekly chart on there. You know, it's awesome there. We've got deterioration in the technicals though. We got the bearish divergence, but that started a long time ago, and that's been really misleading. But what it's telling you is that we're grinding higher with loss of momentum on the upside. So it's a big warning, but hey, we gone up a lot since we were warned that it's losing momentum. The MACD has crossed though, so we, you know, that is a strong message there in this bull market that the weekly MACD has crossed. So I'm very, very open now to the possibility of a top forming. I don't see a top, but I'm open to it here. I was relentlessly bullish because it was awesomely strong, and you know, I'm a trend follower, and that's what I like to see. So what have we got here now in the daily chart? I'll just squash this up a bit so we can see a little bit more of it. We had that wonderful move up, that wonderful strong white candle here, recovering all the fall of the week in one go, and that's a very impressive thing to do, to resume its upward trend. Here we have a short-term divergence in the RSI as well, high, higher high, high, lower high here, and I mean that is tells us that this false break really to new high was once again a you know, made on low with low momentum. However, here we are about to challenge it again as we start the week. The RSI down divergence line here could be broken if we follow through today, and that would negate the bearish divergence here. The MACD is about to cross and to the positive side after a brief flirtation with being negative, but that was very brief. Support, important support at 37.20. Support here, last week's low at 38.53. Resistance, of course, at the all-time high 3982, but most likely it's going to break that and continue its advance. Grinding higher with loss of momentum, but relentlessly moving higher. Next one I'd like to look at is the FTSE, and the FTSE is not grinding higher in the way I'd like to see. Okay, again, the weekly chart here to start with. I'm noticing this triangle forming. We've got a series, this is a good triangle, series of rising lows, 1, 2, 3, 4 at the bottom here. 2 or 3 on the upside on the weekly chart. Massive resistance, I mean multi-year resistance above us here, starting at above 7,100, let's say there, and we're of course trading below that now. The triangle is symmetrical in shape, so we don't really know whether it's going to break up or down. Lots of support below us. MACD is positive, RSI is slightly positive. That's all you can say about that. So here is the chart here. With I put that as a dashed line because it's not properly formed. The lower side of the triangle I put solid because it has got at least 3 points on it. We are mid to high in the triangle, closer to the top than the bottom. So the question is, are we going to continue the triangle, or are we going to finally break out of the triangle? We've got a squeezing going on in the Bollinger Bands, which indicates a volatility move. This could be a volatility breakout or a collapse, where we once again make another new high in the triangle. The ADX is extremely low at 10, and when you get to below 10, I've found the ADX indicates a volatility breakout. So that's right on the cards of a big move in sterling. From the squeeze is telling us that, and also the extremely low reading in the ADX. The MACD is not, the RSI is not giving us a clue which direction that's going to be. It's at 49.4, so it's in the middle. It's as neutral as you can get, and the MACD is negative, but that's really reflecting the flatness and the journey back towards zero. So I think you have to watch the significant levels. The higher line here, the top line here, 6,790, let's say. This high here, 6,815, I'll call it. This low here is important because if we break that low, 6618, then we're probably going down to retest the lower line here, which is will be by the time you test it above 6,560. So watch out for UK 100 making a imminent big move either up or down. I'm sorry, you know, the squeeze doesn't tell you whether it's up or down. We're near the top, and so I prefer it to be to the upside. The one I like most of the indices at the moment, apart from the long-term picture and the Nikkei, is the German 30. It's yeah, and let's go to the weekly on that here. So we've got this rising channel here. It's powered ahead strongly since it took out the 2020 high. It's performing beautifully. I like the RSI moving up strongly here. I know it's high, but it's high because it's strong, not because it's weak. And the MACD, the weekly MACD, is very bullish. On the daily chart, I think that we're about to make a new high. I know we haven't had a particularly inspiring morning so far. The 20-day average is about to cross through the 50 there, so and that will put them back into line 2050. 200 if it happens. The RSI has turned up here. The ADX is coming up nicely, so telling you the trend is strengthening. And I'm hoping that the MACD on the daily chart is not going to cross because we're going to have a steady day. So that would be really nice if we can manage to do that. And the weaker euros is probably helping the German stock index. So we've had a dip. The dip didn't get down to 50, so it was a very weak dip here. It was a very shallow dip, and so that indicates strength in the market, I think, and that this one will move higher and lead us up. It's been the general European stock indices are weak, but not the German. All right, do we have any questions, Dan?
We do indeed, Trevor. We have a question from Wolfgang Kraus. Thank you very much for your question, sir. He says, please don't forget about the Aussie dollar.
All right, Wolfgang, thank you for that. Yes, Aussie dollar. Now, I chose the Canadian dollar over the Aussie dollar because it was the one that was to the right, and it's not as good a pattern at all in the Aussie dollar. So here is the Aussie dollar. This rising means that the Aussie dollar is strengthening. It's deteriorated a lot here. And you know, again, if I may refer to the RRG, look where the Australian dollar is in there. Here's the New Zealand dollar, and where's the Australian dollar?
I think that's it, Trevor, the blue one. It's a blue one, isn't it? There it is.
Look at the direction it's in. Sorry, look at the direction it's going in. Worse is the New Zealand dollar. This is the wrong direction. So it's left of the vertical here. So it's underperforming the US dollar, and it's heading in the wrong direction. You know, with declining momentum, and different. You've got this twirling around in the Canadian dollar, but it's still far to the right and still very strong. So this is reflecting that. You've got this toppy pattern here, quite threatening. We could make a case for head and shoulders top, left shoulder, head, right shoulder. We'll look at that on the daily chart. We've got the bearish divergence in the RSI here. So high, higher, high, high, lower, high. And the weekly MACD has already crossed. And so this is not a good picture here. So this is this potentially right shoulder being formed here. So this would be left shoulder, head, right shoulder. Then I would draw a neckline like this here. And you could make the case that this has been broken and this is a revisit, particularly if we fail here. This would be therefore a very typical breakdown, revisit to the neckline, and turn down. And the technicals are not great at this point here, despite that a steady reaction day on Friday. The RSI is coming down here. It's around the middle point, so correcting a little bit the oversold condition. No, it's not even got to the middle point. Sorry, it's weak. The daily MACD is negative. The ADX is very low indeed, which indicates a trading range, not a build-up of a downtrend there. So this is quite a threatening picture. So it used to be that we coupled the two together, the commodity boom currencies, the Australian dollar and the Canadian dollar, but they're separated from each other. You've only got the Canadian dollar on its own, outperforming the US dollar, and then this has joined the others, which is underperforming the US dollar. So I hope that wasn't what you wanted to. I hope that was what you wanted to hear, and not that I've been a disappointment. I don't see a bottom. The only positives that we've got is this low here, which is at 75.62. Is this low here? So that's a good place for it to stop if it's going to stop. But I'm not sure that's enough. So if we break that low, then I think we've got a definite head and shoulders pattern here with a very significant minimum price objective back, I would say, right down to something like 0.7150, right down here. A big drop if we can break that low there, and this turns out to be a revisit to the breakdown point. Of course, if we move back above the neckline, which should not happen, we should fail right here if this is a head and shoulders top. If we move back inside here, then this isn't a head and shoulders top, and so that strongly bearish view should be abandoned. So it's crucial, isn't it? We got to either hold this level or break it, and the same can be said with the neckline: hold this level or fail at it there. Break it or fail there. I hope that answers your question, Wolfgang. I think I always tend for the longer term view. This is bearish, very alarming topping pattern after such a big advance here.
Mm-hmm. Well,
nothing
intriguing as always, Trevor.
Nothing goes on forever. And there does seem to be an easing back of the concerns over inflation, commodity price driven inflation, in terms of the psychology of the market. It was very dominant, but I think that it's not coming through in the data, in the economic data particularly, and it seems to be taking more of a back seat in the sort of conversation about the economy. So that's probably reflecting that.
Okay.
Sorry, Dan.
No, not at all, Trevor. Thank you very much for your question, Wolfgang, and thank you, Trevor. Intriguing as always. Thank you everyone for attending, and please join us again, same time, same place next week. Even though it is Easter Monday, me and Trevor will be in action. And don't forget that we'll be posting this webinar to our YouTube channel in about an hour or so time. So if you came late and you want to watch it from the beginning, or if you just like to watch the whole thing again, or just a part, please head over to our channel and don't forget to subscribe and hit the bell to get notified. Anything else, Trevor?
No, thank you very much indeed. Good. Thank you for your questions, everybody. I hope it's both intriguing and helpful, and that you have a great week. And it's an important week. There's an awful lot going on here. Quite a lot of things, you know, that are, you know, if it goes up here, then it's a breakout to the upside. If it goes down here, it's a break to the downside. And squeezing of the Bollinger Bands indicates the move that will follow will be quite big. But it's, you know, I just favor the direction, should be in the direction of the trend. I would think on balance that's more likely. So that's the reason. But if we break down against the trend, that can happen too. We can correct further. And that's the story in several technical pictures right now. But we got the levels. That's the great thing about technicals. We've got the levels. We know where the breakouts are. Thanks very much indeed, everybody, for spending the time. And thanks, Dan, for hosting. And have a great week. And may the trend be with you.
Thanks, Trevor. See you next week, everyone. Bye-bye.
Bye-bye.